It's good to have you join us in this week's edition of BOI Weekly. I'm Kumbi Aboluwade. The Bank of Industry recently held the 4th annual general meeting of the Association of Nigerian Development Finance Institutions. The meeting, which held in Abuja, was attended by the Managing Director of the Bank of Industry, Dr. Olashupe Olusi, who also doubles as the chairman of the association. Other dignitaries at the event include the chairman of the BOI Shareholders Committee, Mohammed Bala, top management staff of the bank, representatives of the African Trade and Investment Development Insurance, the managing director and CEO of Credit Corporation, Uzoma Uwagba, government officials and heads of development finance institutions from the federal and state level. A major focus of the meeting is on how to foster global partnerships and enhance the businesses of large, micro, small and medium enterprises to elevate Nigeria's economic prosperity. Speaking at the event, the Chief Executive Officer of the Bank of Industry says with joint efforts from financial development institutions, Nigeria's current economic realities will improve. Here is the highlight of the meeting.
It's the 4th annual general meeting of the Association of Nigerian Development Finance Institutions, AANDFI. The Association of Nigerian Development Finance Institutions was inaugurated on the 15th of October 1982 and registered under the Companies and Allied Matters Act of 1990 as an umbrella organization for all development finance institutions, DFIs, and state investment companies in Nigeria. The main objective of the association is to create a forum for DFIs in Nigeria to discuss and exchange ideas on issues of common interest, provide a platform for members to cooperate in areas of investment, finance and capacity building for the purpose of creating a conducive atmosphere for the operations of the DFIs towards achieving a sustainable real sector.
We also have land.
Among those in attendance are the Chief Executive Officer of the Bank of Industry, who also doubles as the Chairman of AANDFI, Olashupe Olusi, the Senior Special Assistant to the President on Job Creation, the Director General of SMEDAN, entrepreneurs, heads of development finance at the international, federal and state levels. The focus of the 4th annual general meeting hinges on how to foster global partnerships and enhance the outcomes of large, micro, small and medium enterprises to elevate Nigeria's economic prosperity.
The cooperation between the federal government and subnational governments is critical to this objective of the collaboration with the private sector. Given our mandate as DFIs, our role cannot be overemphasized. Recently unveiled the capitalization program of the federal government, and particularly the associated fiscal stimulus plan, attests to the fact that DFIs in Nigeria must help to engineer the transformation we hope to see in our country in the near term. Distinguished ladies and gentlemen, it is in this spirit of renewed hope that we convene this conference today. We must continuously work together to join our expertise, resources and networks to unlock our economic opportunities. In the course of today's event, we hear from distinguished speakers and panelists on how to advance our mandate as DFIs and to deliver value for great future Nigeria. The task ahead will be daunting, but I am confident that we will succeed if we work together and if we speak with one voice. And to end my very brief welcome remarks, and leave you with this quote by Henry Ford: "Coming together is the beginning, staying together is progress, and working together is success."
Another issue that SMEs face, they confuse cash flow from profit. They will take the first sale and assume it is profit and go and buy the next car, instead of waiting for the end of the year to say, after everything has been said and done, how much is my profit and how much is my cost, so that it is only the profit that they can use to buy a car or whatever else they want to do. All these things are the things that affect SMEs. It could be in housing. I understand some of the sponsors are focused on housing. Indeed, if you look at the gap in housing deficit in Nigeria, It's mind-blowing, yet it's also an opportunity. SMEs that you can finance, members in this room, need to be helped. How can they develop good real estate estates so that they can sell houses? But it is not the first sale of the house that is the profit, but it's maybe the last sale that makes the profit. The rest has to go back into the business. The mortgage refinance company and the other bank of Federal Mortgage Bank, you have a lot of work to be done. How can we help you get more resources? Let us take an example of the deficit. Let's say the house, a typical small house for a small income family, costs $50,000. And we need, 50 million of them. Just do the maths. Just do the maths. How much money is required to finance the housing deficit? Just the houses. I won't even speak about the roads. I won't even speak about the water connection. I won't even speak about the electricity connection. This is the infrastructure gap that the previous speaker from the ministry spoke about. That is where we need a partnership. The partnership between governments and you, the DFIs, to see how can you unlock the potential of housing. Inherently, it also creates jobs, because as you are constructing these roads, as you are constructing these houses, you are also creating jobs. But yet, we need that partnership. So think about blended finance. How can the public sector and the private sector work together to unlock just housing? The same is true if you look at your infrastructure in terms of power. Similar huge opportunities exist. We need that blended finance approach. And I appeal that one of the things that you should be thinking about is how can the government take some of the burdens from the private sector, and you as DFIs finance the private sector to make these PPPs work. They can work in housing, they can work in power, they can work in infrastructure, roads, water, everything. And again, it's a topic that I hear you're going to be speaking about.
All the conversations and discussions that have been had so far at this conference have been around this theme of growing the economy by growing enterprise. And there's been a particular focus on SMEs and MSMEs. And the development finance institutions have a critical role, as we all know. And the conversation has been a lot about growing their productivity, growing their access to markets. But we at the Consumer Credit Corporation, we are taking a stab at addressing this problem from a different end, which is growing consumption. And that means essentially giving capital and capacity to people to buy the things that these industries produce. So growing the economy by growing the productivity, productive capital that is backed by people's income. Nigeria is one of very few countries still of our size where people buy things cash and carry. Where to buy a car, you have to go and pay the whole 40 million naira in cash. Those of us that are used to economies that we aspire to know that if you walked into a car dealership or you wanted to buy a motorbike in, say, the UK or even China, and you gave $20,000, they'd probably call law enforcement on you and ask you how you made your money. So our goal is to get Nigerians to the point where people can be assessed on a personal capacity for credit, have a credit infrastructure that can be trusted. People have credit scores that mean something, and the financial institutions can rely on that to lend to people consumer credit, personal credit, to buy vehicles, to buy furniture, home improvements, to have a better quality of life, so that you don't have to wait till you're 60 before you can buy a car when you've saved up all your life, but you can have a car at 30 and pay for it with your income, and that's a much higher quality of life. And it's a long journey to get there. We work very closely with financial institutions, first to get the infrastructure right, but also to provide capital and guarantees that expand consumer credit. But what's very interesting that we've learned so far from having polled over 4 million Nigerians so far is that people want consumer credit to even start their businesses. So when you were speaking, sir, earlier, and you were talking about SMEs and access to credit, you realize that an individual who wants to borrow money to start their business and has never had a business before has to go to personal credit. You have to go to your credit card if you are in an environment that has credit cards. You have to go to friends and family to borrow money because you don't even have any collateral that you can say to a bank, give me money to start my business. Or you leverage your own personal collateral. My point is, consumer credit is even the start of a lot of MSME development because they have to rely on personal finance, raising personal credit to be able to start their business. So the same credit they would use to buy homes or vehicles or furniture, to pay school fees, to do medical expenses, that same consumer credit, a lot of them rely on it to even start the enterprises that then grow the economy before they can come to a BOI or before they can come to an infrastructure development corporation. So our job is essentially to fix the consumer credit infrastructure of the country and to expand access to consumer credit such that it's the same way that you have it in other climes that we all aspire to.
According to statistics by Augusto & Co., a Pan-African credit ratings agency, Nigeria requires at least $3 trillion over the next 30 years to address its infrastructural deficit. To this end, the representative of the Minister of Industry, Trade and Investment harps on the need for more investments from FDIs.
For growth and the pivotal role of the global finance institutions play on the sustainable economic growth. Distinguished ladies and gentlemen, today's events couldn't have come at a better time than now. The role development finance institutions play in a growing and developing economy like ours cannot be overemphasized. These institutions invest heavily in sustainable projects with the objective of igniting developmental efforts in economic activities, as well as having strong track record in promoting development. This, from the government side, is a laudable activity. In a world where economic models are constantly evolving, the emergence of new sectors offers a unique opportunity to drive innovation, create jobs, and build more resilient economies. However, the growth of these sectors often hinges on access to adequate and appropriate financing. This is where DFIs come into play, bridging the gap between the nascent potential of emerging sectors and the financial resources needed to realize that potential. It may interest you to note that emerging sectors such as renewable energy, biotechnology, information technology, sustainable agriculture, and culture sector represent the future of our global economy. These sectors are not only poised to generate sufficient economic value, but also addresses some of the most pressing challenges of our time, including climate change, infrastructure, food security, and health, which the present government of President Bola Ahmed Tinubu is confronting. We are aware these sectors often face unique challenges that can hinder their growth. These include high initial investment costs, long development timelines, and the inherent risks associated with pioneering new technologies and business models. This is why traditional financial institutions are often reluctant to invest in these sectors due to perceived risk and uncertain returns. Distinguished guests, it's expedient to note that Nigeria's infrastructure deficit amounting to about 30% of its gross domestic product, falls short of the international benchmark of 70% set by the World Bank. The same World Bank has projected that Nigeria will need to invest $3 trillion to reduce this infrastructure deficit. This is attainable when DFIs have confidence in the economy to be able to inject the necessary funds.
Creation. SMEDAN is firmly committed to working with the Association of the Nigerian Development Finance Institutions to amplify this impact. And I believe that we share the common goal, which is to empower Nigerian enterprises to thrive in today's dynamic economic environment. And by working together, we can unlock new opportunities, nurture innovation, and propel these emerging sectors towards prosperity. Only last week, in partnership with one of our financial institutions, the Money Point, we unveiled Nigeria's informal sector report for the year 2024. And from that report, we can see the fastest thriving sectors in the informal economy. Of course, the retail sector took the #1 place, followed closely by fashion, beauty, agriculture, digital and digital electronics and the digital economy. And from that report, we also revealed how small businesses access financing. Of course, 70% had to do with their family and friends, and the other 30% has got to do with other ways of accessing financing. From our deliberation today, I hope that we can look at a very end-to-end approach on how we can how small businesses can access financing from development finance institutions. On our side,
Established in 1982, an umbrella organization for the development of finance institutions and state investment companies in Nigeria, this umbrella organization, AANDFI, was set up to enhance collaborations and cooperation in the areas of investment and finance. The guest speaker, who joined virtually, believes this cooperation can be enhanced.
Again, it provides a huge opportunity to leverage the demographic dividends, where we have a lot of unemployed youths that are smart, very eager to get employed. So agro-industrialization is a huge area for investment that will deliver mutual benefits both to the investor but also for the growth of the continent. Industrialization is another key in manufacturing in Africa. In the manufacturing sector has only increased by 0.6% since 2010. And structural transformation has not really happened on the continent. Even though people are moving away from agriculture and moving to the cities, they are moving from low productivity subsistence agriculture to low productivity informal sector SMEs. And these informal sector SMEs are also not as productive. And that is why we're having a sprawling of youth unemployment in our cities. And it's a ticking time bomb that we really need to invest in order to try and resolve. So unlike other regions of the world where structural transformation means transferring labor from agriculture to other sectors, manufacturing, services, wholesale, and the rest of it, what we find in our report is that in Africa, structural transformation has meant people being pushed away from agriculture due to insecurity and climate change impacts. And we all know what is the challenges in Africa with the cattle herdsmen and farmers and all those things. It is DFIs like yourselves that should actually invest in creating investment opportunities that will help to address those social problems while smiling to the bank, because there's quite a lot of opportunities there.
Amidst Nigeria's economic challenges, key stakeholders believe this forum will address some of the difficulties faced by businesses and promote a more conducive environment for them to thrive. After the opening plenary, it was time for the panel discussions. The first panel discussion dwelt on enhancing private sector partnerships. One after the other, the speakers bare their minds on fostering synergy for industrial development.
We're hearing that the days of going to borrow are over. And even the lenders are also snubbing us, telling us that we are very risky. The perception is negative. Even though Dr. Akim Adesina, the president of the African Development Bank, has said several times, which he reiterated at Chatham House, that perception is not reality when it comes to Africa. According to him, he cited studies conducted by Moody's Analytics, where it was confirmed that the default rate in infrastructure financing in Africa is the lowest in the world, under 2%. Dr. Rama also says something like that. Whereas in other climes, they're in the region of double digits, and yet they are snubbing us.
Others spoke on how development finance institutions can get it right in terms of funding for industrial development.
I think Moody's study shows that Africa's default rate is about 5.5%, which is lower than even Latin America and Asia. Latin America is about 12.9, Asia is about 8.8. And so how do we use communication to demonstrate that the perception of risk is not real when it comes to actual default? And more importantly, these default rates are even in foreign currency. So when we look at local currency default rates, it's actually much lower. Our experience on our portfolio, for example, and this portfolio of guarantees we've issued are local entrepreneurs. We've had 0 default rates over 7 years. So it demonstrates that there are credible institutions, credible corporates that are operating within the market. So I believe the data should help in communication, and hopefully that begins to demonstrate that as we strengthen our local capacity, local financing, and use this data, especially credit rating data as well, especially local examples as well, that could help to address some of those risks. There are others that are beyond our control. Political, we can't control those, but when we use credit information, that helps.
The second plenary session zeroed in on inclusive projects for economic impact. The speakers made their submissions around the matter of ensuring that no one is left behind in achieving industrial development.
National DFIs in particular are very efficient because if they are efficient, they will be able to attract those funds. There are funds that exist, even if you are not looking at going outside Africa, within the African context. And we've had our keynote speaker yesterday highlighted the services they provide. We have African Guarantee Fund. There are a chain of those support systems for small and medium enterprise development and that supports inclusive projects. So effort should be on seeing that DFIs, national DFIs, and at the state level, state investment companies are reorganized to perform, to be able to attract desired funds, to be able to play this role and fill this funding gap that exists within the space.
I would use a few examples to drive home my point. There have been so many very truly revealing presentations that we have heard. I've learned so much, and I think I would just bring it home to all of you a little bit, because at the end of the day, all that we're doing here is to enable an entrepreneur somewhere to succeed in creating development. So I'll take, for instance, Infrastructure Bank. Infrastructure Bank and some other agency here can help us by improving the services at our airports, increasing, and I'll give it a simple example. It costs us about
The meeting wasn't all about speeches. Corporate institutions, individuals and brands contributing to the growth and development of large, small and medium-scale enterprises were awarded for their efforts.
Mrs. Oluwakemi Owolubi, Executive Director, Ministry of Finance, Incorporated, Murphy. We also have with us the MD, Chief Executive, Federal Mortgage Bank of Nigeria, Mr. Shehu Usman Usidi. You're welcome to our meeting.
The recognition is expected to boost their morale as well as encourage others to do better with regards to development financing in Nigeria.
Thank you so much for staying tuned. Are you in need of support to grow your business? Kindly visit any of the branches of the Bank of Industry closest to you by using the addresses displayed on your screen. You can also log on to their website at www.boi.ng or follow the bank on all their verified social media handles. And that's it on this week's edition of the program. Thank you so much for watching. I'm Kumbi Aboluade. Bye for now.